Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, pleasure to be back.
John, did Zephyr Minerals win the World Cup last weekend?
Well, no. It seems that the game was suspended last weekend. I talked to them before we did Discovery Watch last Thursday, and everything seemed to be on track. But by Friday, when I talked to Lauren Comperto, who was finally coming back from his BC vacation retreat, he said that they had drilling breakdowns. And he said, okay, rather than what Will said a few days earlier, that they could be at target depth by Monday, he said it'll likely take till Thursday. Well, today is Thursday, and we got news this morning that the hole is still in progress, and that it's going to take another 10 days before they are at target depth. And so the stock sold off this morning as low as 78 cents because people are saying, how can this be? You've already spent 14 days on something that was supposed to take 10 to 14 days. And the company, which I guess got some blowback on its very sparse news release, put out a second news release explaining that we have had rig breakdowns and very slow drilling progress due to ground conditions, and that we are only at 862 feet of a planned 1,500 to 2,000 foot hole. And so the market has stabilized, but it's now clear that the problems they encountered, which would mean like broken rock that slows down the drilling and the mechanical breakdowns, has doubled the time needed to drill this 2,000 foot hole. Now, maybe they will win the World Cup this weekend. Lauren, when I talked to him today, said that they expect the magnetic anomaly to be within the drill range when it is at 1,100 to 1,200 feet. And if everything's going smoothly, the drill is making progress of about 100 feet per day. So by this Monday, they may have entered the magnetic zone. But then you ask yourself, why are they wanting to push this hole to 2,000 feet? Well, the reason is it's kind of complicated to describe, but they see this Broken Hill target as defined by the magnetic anomaly and by the mineralization that was intersected near surface in 1981. They see this as an east-west trending body that has been folded so that the upper limb dips to the south, and then it inflects around 300-400 meter depth and dips to the north. And the hole is designed to enter in that fold hinge and then continue within that body until they get out the other side. Now, this could be a 200 to 300 meter hole if the magnetic anomaly is indicating a massive sulfide body of this Broken Hill type. It would not be a true width, but it would tell them a lot about how the mineralization behaves within this body. So it continues to be an extremely high stakes hole. If they did get some 200 to 300 meter intersection of very visual zinc sphalerite and lead galena, and the visuals suggest kind of high grades similar to Cannington, this would be an even bigger discovery hole than the Voisey's Bay ovoid pulled in 1995 by Diamond Fields that kicked off a huge boom in the Labrador area. But for now, we have to sit here, continue to bite nails, hope that the drillers get this hole under control, that these ground conditions improve. If and when they hit the massive sulfide, drilling should actually speed up because the massive sulfide material would be softer. But there's also the danger that they would lose this hole, that the rig gets jammed in some sort of fault where everything's really broken up and they have to abandon the hole and start a new one. And they do have plans to drill another hole a bit to the west into the same anomaly, and they would have to build a new platform. The BLM won't let them build a new platform until they're finished with the old one, and that would take several days. And all of this, again, causes a lot of nail biting because the drilling window is from July through October because of that bighorn sheep restriction. The NGO attack on the project pretty much wasted July for drilling. And now we have Mother Nature in the form of difficult rock conditions trying to slow this drill down from reaching the target. So it seems like multiple forces are conspiring from allowing Zephyr Minerals to deliver an absolute monster discovery. So for now, we continue to wait and bite our nails.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with John Kaiser. John, a month ago, you introduced Sonoro Metals and its Cerro Caliche project to Discovery Watch. Sonoro was desperate to raise several $1 million. How did that work out?
Jim, it was quite stunning what happened. Within a week, they had nailed down a $5 million financing. It was at 22 cents, which was lower than the 30 cents or so that the stock had run up to when I first pointed out the potential of this story. It included a full 30-cent warrant, good for 3 years. And within a week of announcing this first $5 million, they had to upsize it to $8 million. Everybody wanted in on this project. And they finally closed it on August 12th. And at that point, I've upgraded it from just being a bottom fish spec value rated junior to a fair spec value favorite within my KRO portfolio. And the reason is that after paying off the existing debts, which are what kind of made John Darch very, very, very desperate at the time, they have just under $7 million, enough to pursue a three-pronged strategy, each one of which can turn the company into a winner. The first thing will be what they initially set out to do, which was a 2025 whole core drilling program that will tackle the 9 trends within the project where there are these low grade near surface zones that are the target for future open pit heap leach mining, but the deeper potential for bonanza zones, very high grade bonanza zones, 200 meters or so depth, it's never been properly assessed. So this core drilling program has probably begun now. And they'll be drilling, 3-4 holes, churning out results every 3-4 weeks. And the market will be waiting with bated breath to see if there is something substantially better at depth at the Cerro Caliche, something similar to what Premier Gold is mining at the Mercedes mine, which is just 9 kilometers to the southeast. That's an underground mine. It's 4 gram per ton gold material. And they've mined and outlined about 1 million ounces on that project. So the big question this core drilling will answer is whether similar potential exists here. And you ask yourself, why was this never really figured out in the past? One of the reasons was that the ownership is very patchy. Whoever had it in the past never had the whole thing. And they were generally just interested in the oxidized near-surface material. And that, of course, does not have much high grade in it. It's been mined out by artisanal workers who picked out the high grade veins that existed near surface. The rest is basically a bunch of veinlets, which average out into sort of a 0.3 to 0.6 gram per ton range. And they did publish a resource last year of 11 million tons of about 0.5 gram per ton. Now, the core drilling, that's blue sky, might happen, might not happen. If it does happen, it brings a whole new audience to this story. But the bread and butter is the potential for all these zones to eventually add up to a 75 to 100 million ton footprint of from 0.3 to 0.6 gram per ton material that could be open pit mined and heap leached. And this, I've done an outcome visualization for it. If they could actually stitch this all together, that would be worth $250, $300 million at the current gold price. And of course, this $1,900 to $2,100 range that gold seems to be bouncing around in right now, these are numbers nobody has ever used in any sort of economic assessment of gold projects. So Sonoro Metals, with its Cerro Caliche project, it offers the blue sky from high grade, deeper discovery. It offers the optionality that $1,900 plus gold is here to stay, and they will be starting in September. They'll start an RC program of 70 to 100 holes, which eventually will stitch this together, hopefully get the resource estimate in the final part of next year. So that's the big optionality play for the longer term investors who are looking at a way to participate in gold, not just staying here, but perhaps even going significantly higher. But the third prong, which was actually their original plan A that they were pursuing last year, is to do a small scale 3,500 ton per day pilot heap leach operation. And that would, crank out about 20,000 to 25,000 ounces a year. The permitting for that is very quick. They would hope to have this underway by the end of the second half of next year. And the money that they've raised allows them to advance the engineering for that. This is what the Chinese engineering procurement companies were supposed to be doing. That got disrupted early this year when COVID-19 hit and pretty much shut down all traveling for due diligence into Mexico. Jorge Diaz and Herdrick, the VP of Operations and VP of Exploration, they're based in Mexico, so they can get all this stuff organized and done without all this back and forth problem of foreigners coming into the country. And this, what they call the HLPO project, this would probably cost $10 million to get going. And John Darch, who is an investment banker and has had plenty of experience in past decades with his involvement with the Crew Group of companies, now he's looking at chasing down a gold loan to bankroll this smaller scale operation, which would just tackle part of that 11 million ton resource, and it would be eventually engulfed by the much bigger operation, which they would hope to start permitting in 2022, when they've got the resource together and they have the small scale heap leach demonstrating, yes, the recoveries are what we said they would be, and gold is still high. And so we are now going to basically swallow the original small-scale operation into a much bigger multi-pit operation with a single heap leach facility off to the side within the property. So this company's gone from near death, owing $1.3 million, mainly to insiders, and suddenly being in a position to deliver success on 3 different fronts.
We'll have more with John Kaiser right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with John Kaiser. John, a month ago you talked about FPX nickel, and the stock has nearly doubled since then. Are there any new developments?
Well, what I talked about a month ago was Stefan Ayanu's research report that he had put out, which modeled what the updated PEA that the company is working on might end up being worth. And he muddied the waters by having the company raise $2 billion or 40% of capex, $2 billion capex through through an equity financing at 27 cents, which made the whole thing have upside potential to 35 cents. And of course, that's silly. This company will never raise that much money on a standalone basis. The Dakar project is really all about being acquired by a major producer who wants to have a long-lived nickel resource in a jurisdiction that's secure, and one that may even have ESG credits in the form of it might end up being carbon neutral, and it certainly will have a minimal impact on the environment beyond, digging a giant hole, that because only about 0.1 to 0.15% of the ore is actually going to be extracted and turned into nickel that's sold in the market. The rest of it will be tailings that go back eventually into these pits. It is relatively low impact. And the market's starting to understand that this project, which, labored at 5 to 10 cents for several years after they got it back from Cliffs in 2015, this is a potentially very valuable project. And this past week, I went and did my own modeling of what that updated PEA might look like. And it's maybe a month away, sometime in September. Now, I've just done a speculative modeling, and one of the things that comes out is between $5 and $10 a pound nickel, this thing is extraordinarily sensitive to the nickel price. At $5, at a 5% discount rate, the NPV is about $383 million, and at 10%, it's actually a negative number. If you go up to $10 a pound, the difference between 5 and 10% is 2.6 billion to 5.4 billion, and this is U.S. dollars. If you convert that into Canadian and assume no further dilution, you're talking $19 to $39 if the fantasy price of $10 a pound nickel became reality. At the current price, it's a nickel price of about $6.56. The numbers I came up with are $4.80 to $14 for the 5% and 10% discount rate. And it's very interesting to see that with a very high capex project like this and a very long mine life, the discount rate that you use makes a huge difference. In the gold sector, we're dealing usually with 10 to 20 year mine lives, and everybody likes to use 5% simply because they get away with it. With a base metal project like that, it's not going to be 5%. So those upper numbers, those are not realistic. And the way to look at this is if this project's going to be worth, in the eyes of the beholder, somewhere between $1 billion and $2 billion, what is it, at what stage, that they would be willing to pay for this, for the right to spend, another $2 billion on this project? And that, the realization that this is the way to think about this is what's been pushing the price higher. And it also explains why the insiders and even the lenders have been busy putting their own money into this company to fund its advancement without asking for warrants. They've internally seen what the potential is, and of course the key thing is what is the long-term nickel price. And the way I've constructed this model it really shows that if we end up with something like a $7, $8 nickel price, this thing will be a virtual no-brainer to go into production, especially if you can turn those ESG credits into reality.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.